With each new release of data from multiple research sources, it becomes increasingly clear that the Sydney market is moving steadily into a recovery phase. We've seen sales activity increase in some of the key Sydney markets. Auction clearance rates have improved, rents are continuing to rise, and prices are showing increasing signs of returning to growth. So are we surprised at hotspotting? Well, no, this is exactly what we forecast, particularly after analysing the sales activity figures for the December quarter of last year, which showed improvement in key sections of the Greater Sydney market. After completing our analysis of those December quarter figures, we reported that we saw evidence of recovery in some sections of the Sydney market, while noting that across Greater Sydney, the market was still quite segmented. We noted that there were suburbs where sales activity was trending upwards, and there were many with steady and consistent buyer demand, but others that were still declining. So our report back in February said, perhaps the most pertinent observation is that after the Sydney market dropped markedly in March 2022 quarter, it improved in the June quarter of last year and has remained quite steady since then. And we said, this overall steadiness and absence of marked deterioration perhaps explains why some research sources have reported better price data for Sydney in the early part of 2023. And since then, week by week, more data emerges which confirms the general recovery in Sydney prices. SQM Research, PropTrack and CoreLogic have all reported more positive price data for Sydney in February and in March. CoreLogic, in fact, reported that the median house prices for Sydney rose 1.5% for houses and 1.0% for apartments in March. And now Domain has published its latest price report with small but notable increases in the median prices for both houses and apartments in the March 2023 quarter for Sydney. The latest price index from SQM Research, which was published on the 25th of April, reported a month-on-month increase of 1.7% in the median house price for Sydney. And at the same time, Sydney rents continue to show exceptional growth on the back of a very low vacancy rate, just 1.3% in March, again according to SQM Research. They say that overall residential rents in Sydney have risen 25% in the past year. And it's worth repeating our observation that the Sydney market dropped before the Reserve Bank started to increase interest rates in May last year, and it started to rise again before the Reserve Bank hit the pause button in April of this year. In other words, the trends in Sydney, as elsewhere, have not been driven by interest rate movements.